We're joined by Kwon. He's Goldman Sachs' co-head of Korea research. Kwon, thank you very much indeed for joining us. First up, this is quite a bolt out of the blue. Most people just thought this was a shoo-in, this interest rate hike. Well, there would be an interest rate hike.
I think this was a close call, although we expected no hike this time. I think in the end, the Bank of Korea MPC consider the external factors more serious than domestic factors.
Okay, so what are the factors that they're looking at? They're just waiting and seeing whether these inflationary pressures do build in the economy?
There have been a couple of the data points which came out since the last MPC meeting. Number one, U.S. slowdown was much sharper than expected, and there is also a growing concerns over double dips. I think this was one factor. Another one was continuous decline in the bond market globally, which increased the spread between Korean bond rate and the global rate, which could increase the more capital inflow if the Bank of Korea maintained the hawkish stance and continue to raise rate.
Yeah, you think, though, that we're going to be, well, by the end of next year, about 1% higher in terms of the cost of borrowing there in Korea. Is that correct?
I think that is what is reflected in the forward market, 1 year forward. But we have a relatively dovish view. We expect MPC will continue to raise rate, but more gradually and moderately than expected by market. Our target rate for the end of next year for MPC policy rate is either between 3% to 3.25, which is only 100 base point or 75 base point higher than current rate.
Tell us what sort of state or what sort of shape the Korean economy is in right now.
Well, if you look at headline numbers, it looks very strong. But some of these are technical factors driven by the inventory accumulations, not from the final demand. And also, if you look at the outlook for the export, it's still robust, but it is on the decelerating pace.
I was asking you before we, of course, had these technical difficulties, what the impact was of the weaker won and how that's been affecting exports.
Yes, we see some signs of a benefit from weaker Korean won for Korean exporters, including tech and auto. But I guess at this moment, still what is driving force for Korean exports performance is the productivity increase and also their market positions rather than currency alone, given that the impact of Korean won on exporters' margins are declining for structural regions like more overseas factories, and also a lot of hedging activities going on. So it is not the case that our performance of Korean exporters are due purely to the weak Korean won, but nonetheless it is a contributing factor. Our expectation is that as far as Korean won stay above 1100, even with a strong Korean won, I don't expect any problems for Korean exporters going forward.
Kwon, thank you so much for joining us. Kwon there from Goldman Sachs, just having a look at that interest rate decision, having a look at the South Korean won as well and how it's faring and how it's affecting the economy there.